Keep your stops in place. And also take some profits if you got in there at 74. Take some off the table. Now work in this 74 area. All right, coming down here now. Got a couple points here against the 73. Got filled there at 74. So just feel some off the table here. Do trading multiple contracts. Again, we're just trying to take 2 or 3 points on our trades here. We definitely got 2 points. If you can get a little bit more if you're trading multiple contracts. Otherwise, just take your profits. All right. It's a nice little opportunity here for those of you who jumped in at the 74 area, 73 area. And nice little rotation here against our first resistance area here at 73. So you did jump in. Nice trade, no heat. Those are the kind that we like. Like no heat. And to get filled on the top end of the range too. So all of that. All right, you want to try to stay short of a trailing stop here. If we get back to 64, that would be a really nice trade, and probably good as we're going to get for today. Seeing how slow it is, and also waiting for unemployment tomorrow. All right, nice rotation here. Again, if you're trying to stay short. All right, again, if you're trading multiple contracts, you can take some profits and try to stay short with just a little bit and have a trailing stop, so that way you don't lose any money on the trade, and see if we can get back down here to 74 with anything you got left over. Otherwise, it was nice rotation there against our first resistance area here. And the 74 is always 74, is always 74, and that kind of worked out very nicely for us. And now we're just kind of flat, and let's see here if, where we're going to go from here. The next resistance area on the upside, we got up here at 80. If anybody has any questions, feel free to ask in the chat. Yeah, the ADP number we talked about, the initial trades we talked about. Both of them showing either unemployment not good, and probably, like I said, going to have rate cuts. It could be confirmed with tomorrow's number. If that also comes out weaker than expected, in addition to the adjustments that they made over the last, I mean, those were crazy adjustments. I mean, it's pretty much a lock. It's just like I said, it depends if they're going to do 50 or 25. Well, football starts today, new season. Amazing how they come around so quick. NFL, such a they definitely got a thing going there. I tell you that much. Right. Again, we've got 8:45 PMI composite. So, but that's the final number. It's not the initial, so probably not so much as a big market mover. But definitely the ISM services could be at 9 o'clock. All right, we're kind of flat here. We're going to let this number come out here and do its thing, and then we'll go from there. All right, back up here to these interim highs. Number is out. Floated a little bit up, but again, not a big there. Our next level on the upside we're looking at is up here at the 80 area. There are the levels in the chat for those of you who want to knock down the levels. We're at a little range bound here, so nothing much to get excited about here. Just be patient. All right. Well, we did not make a new high there. Just kind of messed around with the top end of the range. Came off here a little bit. And again, we're range bound now. Number coming out here at the top of the hour. We'll see what that does to the market. Next upside resistance we have up here is at the 80 area. All right, we're going to have a number here at the top of the hour. Let's be a little bit patient. Upside resistance up here at 80. So be patient here. Touch. I don't think that the market looks at market as they will independently look at numbers. They're not going to be looking at how that happens. I mean, numbers are numbers. Doesn't matter who fires who or who gets what, whatever. And they were bad. So it's that simple. You know? And you can, market is bigger than anybody. You got to remember that. And so if the numbers are bad, the market's going to react accordingly. You know? Numbers are good. The market is also going to react accordingly. Oh, that's always been the case. Remember the Hunt brothers when they were trying to corner the silver market? I'm talking about back in the day, markets are just bigger than anybody. I mean, you can almost say that somebody could, corner the oil markets right now, the futures market, especially some of these big, but they don't. So amazing. All right, we got a number coming out here momentarily. Again, we're flat. We don't like to have any positions down when numbers are released. All right, again, we are flat here, so let's see what happens. Here in these interim highs, you can see the ladder ticket. They don't have any 100 lots anywhere up and down. Ladder tickets kind of thinned out a little bit. Okay, see now there are 10 lots up and down, not even 10 lots up and down. Ladder tickets number is out. Not really doing anything to the market. It's amazing how they thinned it all out and it's not moving. It's just not going anywhere. All right, well, at least we had one opportunity this morning, so, it's pretty good these days. And it was early, right off the morning, so all that. Look, these these rally markets are tough to trade. They don't give us many opportunities. The volatility is sucked out of the market. The VIX is kind of low. It's actually not as low as you would think, but only because of that break the other day. But once it's gotten back here, you can see how narrow the ranges have gotten, especially when we're trading in morning hours. But it is what it is. Yeah, so now we're kind of going nowhere fast here. Again, we're just kind of range bound it a little bit. Bouncing off of our blue band there. All right, our downside support is down at the 56 area. All right, we're down ticking here a little bit. Bonds did not like that number. It came off there a touch. Yeah, the 115 handle there in the bond market. Pretty good rotation there in the bond market. Let's see what the yield is. Don't have it. Headed, but got rid of it. So yeah, they're probably in about less than 4.25 there. Depends. All right, coming out here to the low end of that range, you can see, but we've got 56 below that. We've got our band in our hourly coming right in there. Right here at 60, but we have 56 as the downside. Okay, we're down ticking here a little bit, looking at the 56 area down below. Got down there to 59 and change. Pop back up here a touch. I have some services given 52. There's like 15. No, no, bonds are not like it. That's for sure. Oh, we're staying here on these lows. So we got a 56 as downside support. Don't know if we're going to get down there or not, but that's our first support level. All right, slowly coming down here to 56 area. 57 and a quarter is the settlement price for those of you who are like his settlement price. 57 and a quarter. Yeah, I'm just gonna hang in here on these interim lows. 56 are our support level here on the downside. Inch down there, got down to 59 change, and popped back up here. And so kind of rotating back into this range, so kind of not much going on. Very, very choppy here. That's true sometimes. All right, quickly rotating down here to the 56 area. We went all the way up to our pivot area there, a blue band, and came flying back down here. We're going to work in this 56 area now. This side got in there at 59 there and had a nice little quick rotation. Obviously did not get down to 56. Like I said, I scaling around my levels there. Back down there, we're still on the same bar, so the 56 still workable. But you should, if you took the 57 there, you got a nice little quick rotation. Now we'll see what we want to do. If you're more risk averse and you don't want to, if you made money under 57, you don't want to take your risk there on 56. Totally understand. Maybe adjust down there to 55. This is what we do with the price action. Anybody has any questions as to how we do things, please feel free to ask in the chat. We are scalping, looking for areas of inflection that create opportunity for scalping opportunities for us, 2 to 3 points, and use the levels that we gave out this morning in addition to price action trades. Obviously, that was a little quick rotation against our 56 area. We had to be a little bit patient there for it, but quickly had a nice pop back up. Now coming back down here, we'll see what it wants to do. If you still want to use the level, you can definitely adjust a little bit. So there are the levels in the chat for you that we use as a guide to the day. And, again, depending on if you're happy with the money that you made, again, if you did take the 56, then it's fine. 57, got down to 56 and a quarter that time. I did not get filled on my 56. So I'll adjust here a little bit down to 55 against my level there. If anybody has any questions, feel free to ask in the chat. Don't mind questions. All right, so rotating back up here, and see where it wants to go from here. All right, and just kind of hanging now. Again, we did bounce off of our 56 area there. All right. Well, we're bouncing off of that low there, coming back into this range. I thought I knew it was going to be so good. I would have told you to hold on to them, but who knew? All right. Quickly rotating here from those lows back up here to these interim highs. Again, we already tested the 73 area, so you need to be very aggressive to retake that level. Otherwise, they're looking at the 80 level above. Again, if anybody has any questions, feel free to ask in the chat. We are scalping mini S&Ps. We're looking for opportunities to scalp using levels and any price action trades. We average about 4 to 5 trades a day, and we focus on the morning hours to give us those opportunities. All right, they floated quickly up to those interim highs, come back here into the middle of the range. Yeah. All right, well, we did get right up there again. He said you would be very aggressive if you took the 73 area. It bounce off of it here a little bit. Again, there's everybody has different risk tolerances, as you can imagine. All right, again, now we're upticking here a touch. 80 is the next resistance area up here. See if anyone wants to get up there or not. All right, trying to extend here. 80 is our next resistance area. As you can see there in the chat, we are just kind of, I have to be patient here and wait for opportunities to scalp. The markets have been extremely slow lately, but it is what it is. So can't really change that. Market's kind of waiting for the non-farm payrolls number tomorrow to kind of confirm a rate cut, basically, is all it's going to do.
Hey, quick shout out to Lily R. Hey, Lily, you're back. Give me a high sign that you're real, not a bot, or we're going to have to exit from our service. Lily R. For those that are joining us through our socials, join us now live in Zoom. Read the instructions on the bottom of your charts.
Now we're going to just hang in here on these interim highs. We have 80 as our next resistance area on the top side. All right, we're up here at these highs. We've got 80. Again, like the scale around my levels, so we're at 79, 80, and 81. If we get up there. All right, coming up here to the 80 area, maybe. Right up there to 78.5 here. Kind of stopped. Kind of annoying. Well, maybe not. That's what it wants to do. Our first, our resistance area is up here at the 80 now. Okay, trying to get up there now. Working this 80 area. All right, nice little rotation here against our entry point there at 79. Got us a quick couple points here. Again, we talked about how we scale in around there. And yeah, right up to 79.25. So it was very nice. Took no heat on that. If you're waiting for the 80 here, as long as we're on the same bar, but it's a little bit riskier, obviously. Again, we're not going to be perfect. That's why we kind of scale in. We talk about scaling in, but you don't have to. Everybody here has different risk tolerances. You just have to pick your spot, and if it gets there, great. If it doesn't, then make the adjustment according to the price action. All right, coming down here a little bit. Again, we got right up to 79 and a quarter there. Talked about how we scale in around an area because we're not going to be perfect. All right, so we're on a new bar here, so be a little bit careful there against the 80 area, only because bar closed and there's a little bit more risk involved there because we got so close and yet did not get it. So make that adjustment. Maybe take the 81 against the 80. If you're more risk averse, you're not going to take the level at all. Just it is what it is. Can't be perfect. But you have to understand the risk involved and to make the adjustments accordingly. All right, well, we got up to 79 and a quarter here. It's turning down here a little support right now would be around the 60, 67 area. All right, I guess we'll can't complain about this morning so far. We've had a nice rotation against our downside support there, and as well as a couple of our upside resistance areas. And some nice rotations here against them. Anybody has any questions, feel free to ask in the chat. We don't mind questions. We are just trying to take advantage of ebbs and flows of the market if the market gives us those opportunities. All right, and now we're coming back up here. So these intermites again. Be careful here at 80. If you're going to do anything, maybe a little bit at 81 against the 80. Otherwise, you're looking up at our next level up there at 89. The big 500 ladder is up there at 79. We're looking at the ladder ticket. You see a big order up there. Again, you're gotta be careful there at 80 because of the price action. If you maybe adjust there to, if you're going to take it, just be traded small. Again, everybody here trades differently. Nobody here trades the same way. I try to explain the risk, and it's up to you. You want to take the trade or not. All right, coming back up here to these interim highs. Again, talk about how you can manage this a little differently up into 80 if you're going to take it at all. Or maybe take the 81 and trade it small because it's obviously a lot riskier right now than it was minutes ago when it first got up there. Well, we not inch our way up there. Just basically drifted ourselves back into this range. Not surprising. Now we're rotating down here. A little support will be around 67 area. All right, well, we're just going to hang in here. And hang it here at the top end of this range. They're kind of flagging here a little bit. Probably want to extend here, so I'd be very careful there around the 80 area at all. And a little support would be around the 67 area. Hey, Anthony, you good to go today? Yeah, great. Get back here in about 20 minutes, 25 minutes or so. All right. So if anybody has any questions, feel free to ask in the chat. We had some nice opportunities here against our levels. You can see them in the chat. You can use those as a guide to the day. As we come here to the end of our morning session, we average about 4 to 5 trades a day. I think a couple of price action trades were probably around 4, maybe 5, depending on how aggressive you want it to be. And definitely our levels played themselves out very nicely for us to give us some nice opportunities. Obviously, you needed to scale in around there just to be able to take advantage of it. And if you didn't and you didn't get filled there, that's okay. Well, next look for your next opportunity. Anybody has any questions, feel free to ask in the chat. Otherwise, we'll get back here in a bit. All right, we are about to do a class right now, so people who are not part of the class, if you can kindly exit and return tomorrow, I'd appreciate it. I'll give you a couple minutes here to take care of that. Now, Lily, if you are here, we are about to do a class right now, and if you can kindly exit and come back tomorrow, I'd appreciate it. All right, Lily, again, ask you to exit if you kindly can exit. I appreciate it. Otherwise, you can come back tomorrow. All right. All right there, Anthony. You there? Can you hear me all right? Yeah, I might have on I asked on the hang on a second. I think I have to. How's that? Yeah, let me think of, all right now. Can you hear me? All right? Can you talk? Should be able to. Mhm.
Can you hear me now?
Now I can.
Okay.
Okay. All right, good. Yeah, I don't. Sometimes this technology is too much for me.
Yeah, I hear you.
I keep pressing no. I keep pressing everything, and hopefully it works at some point.
Yeah. Exactly.
To try to understand it is too much for me. Anyway, all right. How's it been going? You're busy with work?
Yeah, I keep it busy with work, and when I get on the calls, what I'm trying to do, Saul, is like paper trade, right? Until I get my
Mhm.
account set up.
Mm-hmm.
So I thought maybe I'd run through some scenarios and see if I did good or bad. I don't know. That's a
Yeah,
good.
for sure.
So
Exactly what you're supposed to be doing.
So today, what I saw is, we started approaching the resistance of 73. So I guess my action would have been to put in a sell at 73, a stop at 76, and then a buy at 71 to gain 2 points. Would that have made sense?
Yeah, that would have made sense. Yeah, that makes sense, and that would have worked out.
Yeah, I think it would have worked out based on what I saw.
Right. According to what you just said there, that all would have worked out.
And then I saw it going, and then when it started going down toward the support level of 56, I would have put in a buy at 56, a stop at 53, and a sell at 58 to gain another 2 points. So that would be my next action.
Right.
So,
yeah, but we never got down there. We got down to 56 and a half, 56 and a quarter.
Oh, it didn't make 56? I thought it did. Okay.
Got down to 56 and a quarter, unfortunately.
Okay. So I wouldn't have gotten filled there unless I would have scaled, right, at 55, 56, and 57.
Right.
Okay.
Correct. Now, if you did the same thing on the 73, if you did 72, 73, and 74, and put a 77 stop, you got filled on everything and then made money on everything.
Yeah. Okay. Let me make a note of that then. Yeah, I guess I'm just trying to keep it simple, but I understand the scaling. It makes sense, and you got a better chance, I guess, of getting filled.
Well, we're not. The only reason it's not. It has nothing to do with getting filled. A better chance of getting filled. We're not going to be perfect.
Right.
That has nothing to do with better chance of getting filled. I wish I could tell you it was going to go down. I wish I could tell you it was going to go down to 56, or 55 and a half, but it went down to 56 and a half. I mean, in the scale of things, we can't be perfect.
Right.
And that's why scaling in allows you a little bit of not being perfect, because we're not perfect.
Right.
So, the area is there. Sometimes the market will be perfect for us and give us a nice fill and give us everything we want, and it'll be perfect. But that doesn't always happen that way.
Yeah. Yeah, I like the scaling. It seems like it's pretty easy to understand. So I think I definitely get that. So it makes a lot of sense. And then I saw it went back towards 73. So and that was another question, I guess, is once you hit one of your levels, and then it goes, it travels a little bit and then it comes back. You could hit the level again, right? You can hit it twice.
So right. So that's always a good question, and it all depends on volatility and how much the markets are moving around. Uh, because it's kind of slowish these days. To go retest of a level is that's what it's called, a retest. Is probably okay the first time to it, right? Like what you're asking. So it's a good question that you ask, because it all depends on somebody's risk tolerance more than anything else. And sometimes it's easy for me to say, yeah, we're going to go and retest that level. And the reason I could say that is because we have a spike. Remember, I'm always looking for a retest of spikes, and the spike is like what we have down here at 56. Where it's kind of open. This spike down here by itself, nothing's really there to around it.
Right.
So that's what I kind of like as in regards to a retest. But there are retests of the levels, and you saw that today. And the kind of you need to be a little bit aggressive on that. Okay, so if you're looking, it's a lot risky. It's a little riskier than the first time.
Okay. So the retest is riskier than the first time. Okay.
Right. The first time is always the time you want to get it. Right. And then it's not to say that the retest is not going to work. So I would suggest that, watch it and see how many times it works for you. And also, but you have to be careful in regards to look at the, the volatility on that given day, because that's going to help you understand whether you're going to take the retest or not. When the markets are kind of slow and nothing much is happening and we get to a level and it breaks off, a retest the first time is not as risky as when the markets are whipping around and they go retest the level and they kind of bust through. So you have to, when these markets are as slow as they are, a retest is doable. And when the market gets a little bit more aggressive and there's more volatility in the market, then they're a lot riskier.
Okay.
And you asked me about last time we talked. You asked me about price action. So the price action depends on any given day. Is always going to vary. Some days there are going to be a lot of price movement and a lot of volatility, and that goes with the price action. And so you have to take that into consideration. How much volatility do we have that day? How much price action? How much movement are we getting that day? And if you're getting a lot of movement, then you're probably not taking the retest of a level is probably not doable, because it's going to bust right through usually. But if it's slow and there's not so much volatility and the price action is just kind of just bouncing around and staying in a little bit of a range, and you know what I mean by range, right? When you get into this into this area here where it stays here and goes back and forth for about 30 minutes. So in a situation like this, if you want to take a retest, it's a little safer than when the markets are, when you're not having so many bars together. And again, we got the same thing here, where the market is kind of just hanging here, and give yourself a little bit of a what do you call it, a range. So you have to just figure out the volatility and look at the price action to help you determine whether you want to take that level or not.
Yeah, I noticed a lot of times you talk about being range bound, so I guess that would be a better time to do that than not. Okay.
Right. If it's range bound and we go retest a level like the 73, probably okay. Maybe we take it first time, maybe the second time. You definitely don't want to do it the third time.
Right.
Right.
Okay. Well, that makes sense. I mean, I guess if you make good money on the first one, I mean, why risk it?
Yeah, but even if you make good money on the second one, you definitely don't want to do it on the third time.
Yeah, exactly. Okay.
Right.
No, that
So
makes
now, so that's that. I said earlier, if we take this out, if we take all of this stuff out, and don't look at this, prior to this was happening right here, this
right.
little range bound here. This
Yeah.
is called flag as like a flag. This is like the post. Okay, and this is the flag hanging on the top of the post. So it's called flagging,
Yeah. Okay.
technical term.
Right.
And the flagging usually gets itself into a range. And what usually supposed to happen is we're going to bust out of the range and extend some more. So this is a bullish sign at this, in this situation where the market is flagging here. And once it starts flagging, you can see if we have this top of this area here prior to that, and then it comes back down here. And so this is your support right in here of the flag. Okay, so what happens is when usually it does this, there is usually, I always say usually because nothing is etched in stone, right? But usually what happens is that you have a base that was already built from prior highs. Prior highs become support, which is what happens here, and then it's flagging. And so the logic here is that the market should extend to the upside. Okay.
Right.
But the good thing about this is that you know where your stop is. So your stop, if you're looking for a stop, let's say this is 75. Your stop's going to be a point below that, which is 74. Right. That's where your stop would be. And that would get below this. And, this could be a rotation to the downside. But, so if you're going to buy this area, it extended, and this bar here screwed everybody. Okay. Because it got up to 81, 80 and change. And then, if you used our level, 80 was our level, and it did finally break down. But then look what happened. It broke down to the support area here at 75. Right? It came all the way almost down to the bottom of the flag. So two ways of trading that. If we see the flag formation and you see it try to extend, what that last bar, what it did there was it took a lot of the weak longs out of the market because they are looking for extension of the market, and it didn't happen. And so they kind of sold it off just a little bit. And then the buyers, who are really the ones in charge right now, came in and bought it, and the market extended. So what do you do as a trader when you're looking at this situation where you can see the flag formation, right? And you can see the support level because of the way this held here as resistance and now is holding here as support. You can see now, what is this now? What would you, if you see this formation and the market it has a tendency to go up. Okay, so you want to try to buy it, correct? If you see this and this is happening. So you also know that below 74 is where you put your stop at 74, or let's say 73, 75. So now you have an opportunity to make a trade, and with a 2-point stop, and say to yourself, okay, if it gets below 73, 75, I'm out. So if you put your stop in there at 73, 75, and where if you have a 2-point stop, so you're trying to buy 71, 75, or 72. Okay, that's what you're trying to buy. So if you put your order in here and you have your stop, then you can see if we get back down to the to the bottom end of this range, this is where you want to buy it. Well, I'm giving you this as scenario is only because sometimes if you know where your exit strategy is, where you don't want to be long, right, below this support level, you can put in an order, a buy order, and you would say, I don't know if it's going to get back down there, because once it started inching up, it really didn't make this move. You know, this was like a little surprise. If you bought this here on this little move down here, that was a gift with a 74 stop. And the only reason it was a gift is because it should have really held and it continued to go up. Okay. But this is where you can try to get, the market sometimes gives you gifts by putting in an order with a 2-point stop, by knowing where your exit strategy is. So you go backwards, is what I'm trying to say.
Yeah.
Okay. So here's the support, resistance before. And once we got above it, that becomes support. That concept right there is what, that is a technical concept. Previous resistance becomes support. Okay, that's what the market has. That's where, that is definitely a technical term that you should consider.
Okay.
Where previous resistance becomes support, and this is a perfect example of that.
Okay. So, but that's really not following our philosophy, right? Because what I would have done, what I wrote down in that scenario was I would have went short at 80, put a stop at 83, and would have bought at 78 to make 2 points. Would that have been a good move too?
Yes,
Okay.
that was the original trade. Correct.
Yeah. Okay.
That was the original trade. But now I'm telling you, okay, the market got up there. Let's say you made that trade. Let's say you got the 80, you made your 2 points, and this was happening. Okay, so now you see this occurring. So now it's a totally, we already made that resistance. The trade that you just explained to me was off of the levels that we gave out.
Right.
Right. The
Mhm.
trade that I'm giving you was what I'm telling you right now is called a price action trade.
Yeah.
This is where price action dictates your next opportunity. Now off of the levels. So
Yeah.
when I say we got support at 80 or 75, this is where I get it from. I get it from the market creating an opportunity for us.
Yeah. So this would have been more of like a small position trade type thing?
Yeah, this would definitely be a price action. You could scalp it.
Yeah.
You could have bought 70, buy 72s, put your stop in at 74 and take 2 points out of it, or you could take more.
Yeah.
Depending on how you wanted it. But the market set it up for you.
Yeah.
This is one. Okay. Again, remember, I say we have price action trades and we have our levels.
Mm-hmm.
And so what I explained to you, or what I'm explaining right now, this is a price action trade that the market created since we started trading, that created a flag formation,
Mm-hmm.
created support. And now you go backwards. Okay, if it gets below the support, where don't I want to be long? Because if we get below this line here, this line of support here, what is this? This is a lot of space, right?
Right.
So when we get the space, that's a problem. So there's a good chance that it'll go down to this this previous resistance here now becomes support. So there's a good chance of it going back down here to 65.
Mm.
So, but we don't want to do that. That's not what we're trying to do. But you can see that if it gets below here, you don't want to be long, because there's a good chance it'll go all the way down here. So this is where your exit is. You don't want to be long below. And this is what I say sometimes in the room when I'm talking. You don't want to be long or you don't want to be long below a certain level, and you don't want to be short above a certain level. And this is where I get it, because there's some air underneath or air above that the market could extend and move forward or go back down below. But how you can use that information is by giving yourself a trade by saying, okay, Saul just said I don't want to be long below 74, right? That's what I just said, right? So where do you put your order? So if I don't want to be long, I can be long up to 74. So I can put my order in at 75 and take a 2-point stop, or I can put my order in at 76, and if it gets up to 74, I'm out. Do you understand what I'm saying? You go backwards.
Yes, yes.
And the reason I even said that is because the market created that opportunity. And these are the things that, you have to start looking at. Not so you find the support, and the market held here again. So now this gives you a good reason to say, okay, well, I want to buy it here, but I want to be out below here. And then it's flagging. So we have a flag formation, which usually means it should continue to rally a little. And it is. I mean, it's slow, but it is. When the markets are really moving around, and you get this formation here, that once you get above it, it usually gives you 3, 4, 5 points easily.
Yeah.
But today, because it's so damn slow, it's just which is fine. It gives us an opportunity to be able to see the idea and the concept, and to explain it to you.
Yeah. So right there, you would have bought above 74, and you would have taken some profit, higher than that, like or 70,
Yeah.
78.
Right.
Yeah.
Right.
Okay.
I would have maybe, if I got filled here and it started upticking, and it kept upticking, and really didn't have to. I probably would have got out here at 80 because that was my level, even
Yeah.
though it continued to go up. But that would have been a nice trade. I would have made 4 or 5 points on it.
Yeah. Oh, because of the flag.
Because of the flag, because it gave me an exit strategy. That's more important. The flag told you I wanted to be long. The exit strategy told me where I could be long from with my 2-point stop.
Right.
Right. So if I know I want to be long, so now I'm looking where can I buy it, and where do I want to be out? So you have to talk to yourself. Okay, I see this. I want to buy it here. Where am I wrong? Is where you're going to ask yourself. And if you look at yourself, you say, well, below here, below
Right.
74, I want to be out. So that gives you now you know where to buy it.
You know where to buy it, and you know where to put your stop in, just
Right.
below,
Right.
just so you don't go too low. Okay.
Right. So here, you see this nice triple bottom here on the hourly. This is where I got the 56. It was also the overnight low was 54 and a half. So you definitely, wanted to buy 56 or 55s. And you wanted the market to hold this 54 and a half because you have a triple bottom here. Okay, see this big triple bottom here.
Yeah.
And now you can see here, if we get below the triple bottom, what do we have? A lot of air, right? We have a lot of air there. You definitely don't want to be long here below if we break through this 54 and a half, or let's say, we get below 52. So that's why I put in 56, because if you scale in, you buy 56, 4 points, 55, you buy 3 points from the 55, gets you down to 52. It's a perfect out. And you definitely don't want to be long below that, because look what happens here. We can easily downtick all the way down, right?
Yeah. Yeah.
So that becomes it goes all the way probably till here is where I had my other level, but anyway, but my point is that you can see kind of the same thing here that I was talking to about here, right? We have a nice bottom. Right? So when I looked at it this morning, I said, where do I not want to be long anymore? And below 52, I definitely don't want to be long anymore. So I put in my level there at 56, and went down. I almost got perfect there because it got down to 56 and a half. But that was the support. The same thing here. The support is right in here. So you put it a little bit above it. You buy it. Hopefully you buy it, and then put your stop right below it. There's a reason that the market is holding that area. There's a reason the market held this area here, right? And so that was a reason to buy the 56s this morning, because of this nice little level. Same idea of this right here is the same idea as this right here, but a little different, little different chart. So what I'm trying to show you is that even though the chart is kind of the same, and that, the chart is there, the different charts, different setups, different lines, but the concept is the same. And the concept is what you're trying to learn.
Right.
The concept is that you have a base, and below the base there's air, which means you don't want to be long below the base. But if you can buy it right above the base and it holds, there's a good chance it does, at least the first time, then you have a chance to, make a little bit of money. More times than not, this will happen. This is why it's a support area. Now, are we always going to be right? No. Sometimes there's going to be fundamental news, that creates the market. And I always say this, and this is a key, is when there's fundamental news, fundamentals trump technicals. Okay, so the technicals, even though it's a good buy area, even though it should hold, even though everything says that this area should hold, but if there's technicals out there, there's outside influences that create the move through a technical support area or resistance area, it's going to do it. So that's why we try to stay away from trading when there is a number. We try to stay away from trading when there's somebody talking, especially Powell. And these days, when the president talks, especially when he starts saying stuff, the market is getting better at kind of discounting what the president says a little bit more than usual because of his tone. Hi there, Gary. Give me 1 minute here, Anthony. Hi, Gary. We are in the midst of a class here. Our morning session starts at 8 a.m. Central and goes till about 10:30. So if you could exit and come back tomorrow, we're trading mini S&Ps here, but this is after hours in our trading room. So if you can exit and come back tomorrow, I'd appreciate it. Gary, again, welcome to the room, but right now the room is usually, our trading hours are 8 to 10 in Central when the market opens up, and we're having a class right now, but we're not having our usual trading room. So if you can come back tomorrow, I'd appreciate it. All right, I will exit you, but please come back tomorrow if you can. Thanks. Okay.
So Sal, so if you see the flag and you see the opportunity, but there's news coming, you would stay away from it.
Yeah.
Okay. And same deal with the levels. If you wanted to get a certain level, but there's news coming, you pretty much just sit tight and wait for the news to play.
Again, depending on your risk tolerance. Like if I let's say the market was trading, or let's say it's trading right here at 83. I have 89, and then I have 98. Maybe if I like to leave my levels in because I like the action. I will trade them very small. Like instead of scaling, I will leave 89 in and maybe a couple at 98 and see what happens. All right. Same thing on the downside. Instead of me scaling in, I'll leave a 47 in and see what happens. Okay. Now, obviously, there's risk. It can run through, right? But I'm willing to take that risk and see what happens. So, yeah, for you right now, until you get comfortable, I would say, just wait for a number to play itself out. Sometimes it moves the market, sometimes it doesn't. Obviously, tomorrow's unemployment number is going to move the market. But that good thing about the unemployment number, it comes out at 7:30 and we start here at 8:30. So that's a good thing. We don't have to we trade the volatility. There's going to be some volatility after the number at 8:30, which is fine. We'll trade that, but we'll see what happens from there. But
Okay.
yeah, it all depends on you as a trader, if you want to take that risk or not.
So on that note, you personally, do you put in a trade at every level when you start out in the morning?
Yeah.
Oh, you do? Oh, okay. I thought you do it as the market is going up and down, and you're putting in trades. Yeah.
I'll put in my level, and then what I will do is I'll put in my scale in afterwards.
Oh, okay.
Initially, when I see the level, I put it in, and then I'll put in my scale in afterwards.
I see. Okay. So you
Like
pretty
I said, I don't mind. I understand the risk, and I'm willing to
yeah.
accept the risk.
So you put in a sell order at every resistance level and a buy at every support level.
Yeah.
Okay.
I mean,
I didn't know you did that. I thought you did it as we went along. Okay.
Yeah, I mean, obviously, if you you can't if you have only a $5,000 account, you can't, you can only do 5 contracts or 4 contracts. So
Right.
you have to make sure you have a little bit more in your account to be able to do the levels.
Right.
And then, of course, I adjust according to the price action.
Yeah. But it's okay to put them in one at a time, especially if you don't have a big count, right? It's only you're
Right.
on top of it. Okay.
Right. Of course.
Yeah.
Once we get filled one play, that's why I always say, if you get filled, keep your stop in place, because if the markets are moving really quick and we get stopped out, you have to be really good and get in at the next level.
Right.
Right. Yeah. You have to be aware and get in at the next level, because that's what the markets are just moving, but you have to go out and get back in.
Yeah. Okay. Well, it's good to know.
Yeah. So again, everybody trades differently, and you have to be comfortable in how you're trading, and that way, I what I try to do is give you ideas and different ways of doing things, and it's up to you as to how you want to do it according to what makes you feel comfortable. Okay. I mean, I have, I could tell you a story to scare you. I could tell you a story here to scare you a little bit here. I was trading in the bond market, and I had an order in the bond market, and it was, I don't know what it was, a big number that came out. It could have been unemployment, to be honest with you. And to make it to relatable to S&Ps, the market is trading at 86 right now. Let's just, for example, I had an order to sell 65 evens. Okay, just to give you an example. And so the number came out, and I got filled on the 65 evens, and it went up, and I'm short. It went up, and I'm short, and it doesn't matter if you get stopped. When the markets get thin out, your stops don't mean anything. So I don't usually put a stop in there if I have that position on. And I asked I asked my clerk. I go, "Where's I needed to buy him." I go, "Where's the bid?" He goes, "There aren't any." Okay. He looks at me. I go, "What do you mean there aren't any?" The screen was blank. It was moving so fast, and it was such a weird number. And it was in the bond market, and it was a 20 lot in the bond market. Okay. And the market went down, and I bought him. And when I asked him, "Where's the market?" He says, there isn't any. And I look on the screen, it's like 10 points lower. At 10 points is like, it's like ridiculous. It's like on a 20 lot is $20,000. And so he goes to me, "There's no bids. There's nothing here." I go, "What do you mean there's nothing there?" And so I'm sitting there. I have this like $20,000 loser. It was actually $40,000, and there was no bids. I couldn't even get out if I wanted to.
Oh wow.
That's how crazy the market was. And so finally, and you wait a minute or two, and it seems like an eternity. You're waiting a minute or two for the market to settle, to give you bids and offers, for the market to come back to some reality. But that minute or two seems like a lifetime when you have a position on it. You're down $50,000 or $60,000 on it, and it's only a 20 lot. It's not like I traded 100 lots and lost a lot. It was only a 20 lot, and and it was literally a $40,000 loser. And I'm like sitting with it. I'm like, okay, now what do I do? Okay, so you're not going to get into that position because you're not going to have anything. So my point of the story is, and this is what I tell everybody when I tell this story, is that's why you don't put on positions when there's numbers, because you don't want to feel the same way I felt when I looked at the screen and I looked at the numbers, and I'm like, well, how do I get out? I can't get out.
Yeah.
So it's not a good feeling.
No, I can imagine.
It's not a good feeling to have a position on when it's a complete loser and you can't even get out.
Yeah. Yeah.
So
it's amazing. I think I said this to you a while back. It's funny that when there's news, the technicals don't mean anything.
mm-hmm.
Which is,
Right, they don't. And I had this order in there that was so far away from the market. I didn't think I would get filled in a million. No way did I get filled. All of a sudden, my clerk, at the time I was trading in the bond pit, and the electronic trading was just beginning. So I had a clerk who would do my electronic trading for me when I tell him, okay, buy 10 or buy 20 or whatever. So I would arbitrage between the pit and the electronic trading. There was still some ability to do that, right? And so he tells me I'm filled, and I go, "What do you mean you're filled? The order is like so far away." He goes, "Yeah, you're filled." He goes, "What?" And I go, "Where's the market?" He goes, "There isn't any." It's like there is no worse feeling when he tells you that. I go, "Let me see that." "Let me see that," and there wasn't, and I had to wait literally 2-3 minutes before there was something that I could say that there was a market. And at that point, I was only down $20,000. I got out of 5 lots. I lost $5,000 on the 5 lot, and I scratched the other 15 lot. I lost $5,000 on the trade, and I felt like I made $1 million.
Yeah, you saved your ass. Yeah.
So instead of so you asked me about leaving orders. I can handle it because I don't think I'm ever going to go through anything like that again, especially because I'm not trading as much as I used to, like when I was on the floor. So I can leave a 1 or lot or 2 lot in there, and even if it runs on me like it did, it's not going to be a complete disaster like it was that one day.
Yeah.
There's other good stories I could tell you that when you're trading and you get a bad position on, and you have this sinking feeling in your stomach because you're like, what is just happening here? and you're like, don't know what's happening, and you don't